Yeah! Yeah! All right, let's get on with it. Yo, 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 what's up? Comment allez-vous? How are you? Ni hao ma? Jambo? Ohio? What's going on? Hey, I lost my chat. Where'd my chat go? That's going to be muy difficulte. Un momento, por favor. I got to go get the chat. I'm like, hey, what happened in the chat? La-di-da-di-da. Hang on, trying to get the chat gone. Must be this one. There you is. Who let the bulls out? Yeah, hey, good morning. All right. Yeah, I got to mark this. All right. Good morning. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. That's a lot because this is a small niche market. Thank you for being here. Thank you for being a positive contribution to this wonderful community. Together we make the world at least a slightly better place. Today we'll cover technical and fundamental analysis with the overriding goal of putting together a trade plan for this New York trading session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I will be your guide. Actually, you will be the guide. I will be the follower, I suppose. Let me know how I can help. Let you guide me. How can I help? I am here to serve. I am your humble servant. I've been doing this for about 20 years. And I've seen a lot of things, good, bad, and ugly, and I tried to constantly learn from what I do and what I see, and I am willing to share. Ask questions, get involved, treat me with dignity and respect, treat your fellow currency traders with dignity and respect. Please like and subscribe to the channel, and maybe once or twice today I'm going to roll an ad. Please forgive me for that. I'm trying to entice YouTube to promote the community. So if they're making money, maybe that's part of the algorithm. So hopefully that's not too much of a distraction. Now, I do these webinars every day, these live streams every day. So hopefully they do help. Over the decades that I've been doing this, the community has asked me for additional resources. If you'd like to buy my book, a link is in the description below. If you'd like free training videos that describes the techniques outlined in that book, the link is in the description below. If you'd like premium training so you can learn things like, macroeconomics, a Harvard level course. I just deleted all the calculus. So imagine a Harvard level course on macroeconomics with no calculus. How about fundamentals like central banking policy, so you can understand why the Reserve Bank of Australia did what they did? Well, we're going to go through the report today, and you're like, but I don't understand any of this. Look, $88 solves that problem. That's at fxbootcamp.com. The link is in the description below. And lastly, once you develop the skills and confidence you need to be a successful trader, you're going to need a broker that you trust, one that has a business model based on ethics and a symbiotic relationship to you, that they will succeed, or let's say they are best optimized as a business when their traders succeed, because not only do they trade longer, but over a course of time, they trade larger and larger lot sizes because they're successful. Their account sizes are slowly growing, so the lot sizes get bigger. And therefore, it's a good business model for Traders Way to say, hey, we want our clients to be successful because it's good for them and it's good for Trader's Way. And I just love a business model based on that. If you do any quick research, you'll find it's a very rare thing. So you might say, if you believe like I do, Trader's Way has a business model based on, business ethics, let's say. Then you'll say, hey, now that I develop confidence and skills to trade, I want to have a business, in this case, an execution partner, a service provider that I respect. And that would be tradersway.com for me. So for you, why don't you test them out? Tradersway.com. The link is in the description below. Go give it a shot, huh? Cool. Hey, what's up? All right. Some things have changed in the world. Back when we were here, let's do that in a different color. When we were here, the rest of the world was starting to face inflation. Okay? Just starting. Well, in some places like the United States and the UK, it started to become a problem. Well, unemployment was low in Australia. Real estate market was hot as well. And Governor Lowe, at the RBA said in this, right? I saw his lips move as he spoke. And he said they will not raise, right? Not raise interest rates until wage growth, wages, the change in wages, the delta of wages was, right? Was over 3%. That's what he said. So here we are here, and they jacked up interest rates. You son of a... But luckily, at FX Bootcamp in the day trading group, we had our eyes on that prize, and we did do a little deep dive to see that their tone was changing. But they did say it here. I remember because I was doing my job. I was sitting outside in the dark, freezing cold, with a cigar and a laptop, listening to the head of the RBA handle a Q&A after an interest rate decision. And in the Q&A, he said specifically they were not going to raise this year or next year. They're not even thinking about it, and that they don't know why interest rate hikes are being priced into the market, and that they were not even going to consider it until wage growth started with a 3. Oh, I was there. Oh, I was there. That's words right from the horse's mouth. So anyway, so right around here, okay. Anyways, recently, the tone has changed. And we did look at it, and I'm still a little surprised by what they decided to do. But nonetheless, they did raise interest rates, and they succumbed to the pressures. And probably because things have changed. If you remember back not long ago, the Fed was only expected to raise by 0.25. Now they're expected to raise by 0.5, and not just once, multiple times, maybe even higher. And then, oh my God, the interest rates are going to be... So RBA had to adjust. But we did look at it. Okay. Joseph specifically went into meeting minutes and found a few sentences that were kind of setting it up. Santiago Hernandez says, hey, quick question. If a foreign bond yields 10%, but it's falling, well, yeah, so it's revenue, okay, minus depreciation. Depreciation. It's not even revenue. It's asset value minus depreciation. But in this case, well, actually, let's put it this way. Asset value, okay, that's the value of your currency. Okay. Hang on, no. What would this formula be? Let's do asset value. Okay, the value of the asset plus the income of the asset. Okay, gets you right and then minus depreciation. Depreciation. Okay, so the value of your Argentine peso plus the income, okay, minus the depreciation of the value, let's say. Yeah. So it's kind of like, let's do this. Let's just quickly see if this even works out. Interest rate of Argentina. Okay. Okay, cool. Check that out. Cool. Okay, so if we go, just using this because it's easier to see. Okay, so you're going to earn 44% a year if you invest into Argentina. Colombia. Oh, I'd love to visit Colombia. Yeah. You in Colombia? What part of Colombia? All right, cool. So interest, right? So that's good, right? What a great investment. Argentina will pay you 44% a year. Miami. What do you care about Colombia? Oh, yeah. Beer Colombian. Ah, nice. What part of Colombia? I'd love to see the whole country. All right, so here's the problem. Of course, it doesn't even answer the question. Okay, the annual inflation rate is 55%. So you see the problem already? I thought I did. I guess I deleted it. So imagine this. You invest $1,000 into Argentine peso. Okay? So whatever USD worth of Argentine peso. They pay you, so that's asset value. They pay you 44% a year on top of that. So you get a number, and then but you have to minus that the value of that has dropped by 55%. We're not even taking the true asset value because All this assumes is the value of the asset, in this case peso, not dollars. So you get $1,000 worth of peso. So I'll just make it up. Let's say it's 10,000 pesos. Okay? But the thing is, if the inflation rate is higher than the yield, then the value is likely to fall. And therefore, at the end of it, you'll lose money and only get $900 worth of USD back. So now it's even down even further. So if you look at this, XC trading, I guess this will work. This is in reverse. I don't want to see it this way. I want to see it this way. So maybe, okay. So let's just look at that. For the last year, interest rates have been 44%. Argentina will pay you 44% if you loan them money. But look, over the last year, the value of your asset has fallen, and now fallen even faster and faster and faster. Okay? Look at this, just in the last month. And they're paying you 44%. Why? Inflation's higher than yield. Therefore, the asset itself depreciates. Therefore, if you do the math, so we go back to Santiago's question, if a bond yields 10%, does it cancel out any return on investment due to being weaker than the dollar? In math, we say, hell yeah! Okay? It's just math. It's finance, right? It's finance. Okay? Yes. The answer is hell yeah! Otherwise, we'd all be rich lending money to Argentina. Okay, so is anyone going to read this sucker? Does anybody care? Let me guess, you're fashionably sensitive but too cool to care? I got you. I know you. All right. Thank you for joining us this afternoon. Let me see if I can do an impersonation. Hang on, let's do it.
Achievement. Labour force participation has also risen to a record high, and a higher share of the working age population has a job today than ever before. The economy is also expected to grow strongly this year, with the Reserve Bank's central forecast being for GDP growth of a little above 4% this year. This resilience of the economy means that the record low interest rates are no longer required. The other major development has been on the inflation front. Over the year to the March quarter, CPI inflation was 5.1%, and in underlying terms, inflation was 3.7%. These numbers are lower than the inflation rates in most other advanced economies, but they are higher than we have experienced for many years, and they are higher than we were expecting.
How did I do? How did I do? Was that all right? That's my impersonation of Governor Lowe. P. Lowe, as I like to call him. What's up, P. Lowe? Oh, no props for that? Okay, let's take a look, see what's going on. Oh, thank you. Yen and dollar falling off a cliff. Is the world becoming a better place? RBNZ's stability report coming out tonight. Kiwi jobs, Aussie retail sales, Aussie housing. Cool. It's a good Asian session today. By the way, if you become a member of the a video training only member of FX Bootcamp, or a swing trading member of FX Bootcamp, or a day trading member of FX Bootcamp, you'll be invited to a special event. I guess it's tomorrow afternoon to watch the FOMC decision and the press conference with Jay Powell. We'll do all that live. Compliments of the firm. So any level, all members, all and every member of FX Bootcamp is welcome to attend that. Germany only lost 13,000 jobs. Good job, Germany. Much better than expected. %7 unemployment in Euro. Isn't that amazing? In the Eurozone? That's amazingly high. But that's part of socialism, or more bent, any bent on. So you have this pendulum of capitalism, of pure capitalism, all the way to not capitalism, whatever you want to call that. And so there's capitalism, and obviously Europe is capitalist. Canada, Australia, New Zealand are capitalists, right? Hong Kong is capitalist. The United States is capitalist, but they're all different levels of the pendulum, okay? And Europe has chosen to be somewhere on that, okay, where there's a little bit more social safety net, let's say, towards their type of capitalism. Okay? The consequence, it's not good or bad, stop thinking good or bad, just the consequence of their choices is that they will always have higher unemployment. And the other thing, though, is there might be higher unemployment, but if you have a job, you'll never be fired either. That's why employers are so afraid to hire you. It's like getting married, and they're like, man, the divorce is 10 times more expensive than the marriage, and the marriage is outrageously expensive. You're like, come on, baby. $1,000 for cake that nobody wants to eat. And do you really need a white dress? Come on, baby. Nobody believes that. Everyone's on your Facebook account, baby. All right. So anyways, lots of stuff coming up. Oh, another thing we should check. I like to check this several times a day. The same ad keeps popping up, bugs me. I don't want to buy those shoes. Get rid of them. All right. Interesting. We had some big drops during the period of buying Japanese yen. And right now, yields are rising. Okay. So we'll see what happens. The key line in the sand, of course, is right there. Right. 250. From a technical analysis, yeah, well, I wrote a book on that, Sam, and there's also 65 hours of training videos that would address some of that. But if you don't understand fundamentals, because remember, a news event, like one news release, that's not fundamentals. That's a news release. That's an event. So there are many ways to trade events. You can front run them. You can scalp them. You can do an event-driven strategy post-news release. You could trade the spread. There's a lot of different ways. But if you don't understand the context of which the news is being released, you will never find consistency in how the market behaves around the actual event. So you're like, Wayne, how do I trade non-farm payrolls? Well, there's a consistent way, and I wrote articles, and I've been doing that almost 200 times live. There's a standard operating procedure for the event-driven strategy itself. That's one way of handling it. It works often, and other times it doesn't, and the difference is the context of that particular release. You can front run it by trading it 2 or 3 days in advance. Okay, you could trade the spread. So I do know somebody that just trades the volatility and then that kind of stuff and makes a few quick pips. But ultimately, what I would suggest you do if you're a beginner trader is instead of trying like sort of like a trick, when news comes out, how do I trade the news? Instead of learning a little trick, I'd rather you spend time learning what fundamental analysis of macroeconomic data truly is. So you learn the context before you learn the trick. Okay. Now, going back to a question asked a while ago, JK Market said, hey, when is the right time to scalp? The right time to scalp is when you're entering a position. Oh, thank you, Sammy. Sammy's. Well, my fear, Sam, is you go through gurus on YouTube who were probably born the same year I started trading as a Forex trader. But before that, of course, I was a venture capitalist and high-tech entrepreneur. So I came to Forex as a businessman first. And I've always looked at it as a business and through the lens of being a business. And then I worked on my knowledge of the business for 20 years. Now, many other gurus on YouTube, I would imagine, are probably only 20 years old, and they're scalping large size trades relative to their account size. So they're taking sort of riskier trades. They're trading price action. They're taking small little chips out of the block, so to speak, and they're doing things like trading the news, which in and of itself isn't bad because it does create volatility and such, but as a core part of their trading business. And in my humble opinion, that's not the right way. Now, it's sexier, of course, but it's not a scalable business. And as a venture capitalist, if you have a great business idea, great product or great service, but I can't scale it, which means I can sell it to 100 people, but I can't sell it to 1 million people, well, then I don't want to invest. So if you're trading a $25,000 account and you're scalping all day, all right, you can make a few $100 a day. Good for you. How do you make $10,000 a month? How do you make $50,000 a month? And you're like, well, I couldn't. Yeah, well, that's the problem. So if you don't have a lot of money and your standard of living, your cost of living is quite low, oh yeah, okay, chip away, make your money. But the thing is, what I want for you is to learn how to grow a business that can scale, where your trade planning is worth significantly more than the actual trade execution. You understand that? I'd rather teach you how to make a 250 pip trade than a 25 pip trade. Okay? So one is sort of revenue generation, and what I'm trying to teach you is wealth generation. Yeah, well, Greg, it's not going to pay you money, right? Like the ad I just ran, I probably made like, what, $1, 50 cents, right? So there's no money in what I do here. Okay. So anyway, again, I'm trying to teach you how to run Forex as a business and not just as a way to make money. That's all. So if I was, mentoring your startup, we would be working on identifying a larger market and finding a more expensive pain to address. We'd be focused on ways to scale the business so that you can handle more. Therefore it needs to be appealing to more. The pain has to be an expensive pain. Your solution should be as efficient as a solution as possible, requiring less resources of capital and labor so that you can scale. Then you need marketing plans and all this kind of stuff. Like you need to, I would be coaching you on how do you get bigger. Okay, cool. So anyways, I would do the same if you were a Forex trading business. I want to put this into context here. Look at it. Okay, dollar and yen have weakened recently, but looking further back, dollar is still quite strong. So what I would like you to think about, what I'd rather you think about than what's happening now. I have to reiterate. If you're like, oh my God, the dollar's weak. I need to sell the dollar. Oh my God, something's just happened. Oh, look at the pound. Oh my God. Do not trade. If you don't have a trade plan right now that you developed last night, then you don't know what you're doing. You're reacting. Have you read The Art of War? The art of war doesn't say, well, why don't you just jump in, try a few things, see what happens, and hey, get the upper hand and win. It means an honorable general wins because many plans were made. And the idea that Sun Tzu had was to create cause and effect to manipulate the future actions of his enemy, and that which would then turn the odds in favor of Sun Tzu's army, change the playing field to have an unfair advantage. So if you show up today in New York trading session and you're like, oh my God, look at the pound, you're the enemy that's about to be defeated. Do you understand that? Like you must digest this. That if you're like, holy crap, look at that, and you're about to jump into a trade, you're the one that's going to be slaughtered. If not today, someday. Because you're not in control. Someone just lured you out of something that could have been your best advantage, and now you're reacting to somebody else's trade. How did the market move? If the pound just dropped 60 pips, or if the dollar just dropped 60 pips, or if the yen just spiked 60 pips, and then you decide to do something, what happened? You're responding to somebody else's trade. The one they planned out 12 hours ago, and then you're like, uh-oh, look at that. Guess I need to do something now. And you're the fool. And mama didn't raise no fool. So I want you to at least acknowledge that and then back yourself out and say, is that how I want to behave? And if not, how would you like to behave? You understand? Those are big questions. Is that how you want to behave? If not, how would you like to behave? And then let's identify those skills. And those skills would be like, if you didn't plan it yesterday, you don't trade it today. Because why? You're like, well, Wayne, you're going to leave all this money on the table. I got to make money today. Whoa. We're running a business here. What's your strategy? Make as much money as I can. You're going to go out of business, son. Okay? I love the enthusiasm and the entrepreneurialism, but you got no skills and you're going to get wiped out. Someone's going to step all over you. Huh? So be careful. Okay? Make sure you got game first, not just talk. Game. So the best way to recognize opportunities and capitalize on opportunities are taking the ones that you planned in advance, not the ones that are unexpected. Your trades are you take trades that you expect to work because you planned them and you understand them and you're prepared and you trade in the best conditions for those trades. And then when something goes wrong, the losses are small. Or you don't get... See, the thing with trade planning is the most common scenario when you are wrong. So you are planning trades in advance. You're doing technical and fundamental analysis. You really understand what you're about to do. You set up all the plans and you're wrong. Do you know what the most common scenario for being wrong is when you plan your trades in advance? That you don't get any trade. The most common consequence of being wrong is nothing happens. Wowzer, huh? Cool. Sam, I highly recommend you pay the $88 at FX Bootcamp and spend the next year learning. I made it cheap so that money should not be the issue. There's no issue, or there's nothing to prevent everyone here from joining FX Bootcamp unless it's psychological. I can't address if you think I'm a scam artist or scumbag. There's no price that you're going to accept under those terms. So you have a psychological issue with me. Fine. Don't join. It's fine. Because I ain't going to do it. I ain't going to be able to change that. So, but money shouldn't be the issue, is all I'm saying. Okay. That doesn't even cover a textbook if you're in a college course. Doesn't even cover half a textbook. So it's like join or don't join. But I think it'll have a positive impact. I think you'll get $88 worth. You're going to say, damn, this is worth at least $90 for sure. Richard says, I thought price was the leading indicator. Well, not price, price action. Price is just price. There's only two things on this chart right now, price and time. Okay? So you have to combine price and time and how it interacts, price over time. Okay? By the way, let's go back out. And it's slightly working here. This is a remittance trade. And I'm actually a little bit surprised, but it's actually working quite well from late Monday to now. It's actually quite a good move, and I'm a little bit bummed out that I didn't take it. Right there on the 2050, we marked it out, roll reversal. I just had my doubts on this one. Oh, is that right, Greg? That's really cool. Yeah. Birch, did you get it? You got that, huh? Damn. I don't know why I talked myself out of it. It's weird, huh? Hey, Richard, at least you didn't spend $50K a year at university. Susan wants Aussie Swissy. All right. Let's start with the basics here. Okay. Aussie over the last few hours has been weak. Swissy over the last few hours has been weak. Why do you want to trade two things that are weak? I know that's not what you wanted me to do. But that's that. Are you saying because you want Aussie dollar to go back up because of the interest rate hike? Okay. I got you. Yeah, well, that has come and gone. Like, I mean, honestly, well, it wasn't 12 hours ago, but it's so long ago. But yeah, okay. Let's dive in a little bit. Okay. So you have to understand right now they're both weak. So, okay, you can see I already identified everything for you guys. We've already done this. And now you have to simplify, do you or do you not buy this? And right now, you on a daily chart are below the 21 EMA, but the 55 is in control. The 55 is predicting a double top. In this case, it'd be a triple top. Okay? But It's cool. Okay, totally cool. Okay, that's what it says. But you could be a buyer here. And now what you might want to be doing is you either measure the daily candle and you do what I used to call Fibbits. And by the way, I've been doing some searching for EAs and stuff, just kind of looking around as samples. I was thinking about taking a class on writing my own code. And lots of people do Fibbits now. I invented those, which is really cool. I haven't used them in years, but now people are using them all over the place. I'm like, shoot, that's mine. I named them. I had the code developed back in 2000 and probably 3. And now people are using them. So interesting. Or you fib from here to here, or you could even fib from here to here. But what you're looking for, Susan, is this. Santiago, you can buy those. The link is in the description below. So how do you want to do this? Well, if you were a buyer, not a burr, but a buyer, you got to find the time frame that you think is in control. And you say, okay, your job here is to buy this roll reversal. So I'm going to connect all those. You're going to look at the the 21 EMA. 200 is neutral, so it doesn't hurt. 55's coming up. I'm coming up. Okay. And you're going to do a higher high, higher low. Right? Which, right? So you have a bottom. Higher high. Higher low. And so you're like, you've just made the decision that you are going to do this sometime soon. You know the price is what I'm trying to tell you. Somewhere around 69, you're going to buy. You know the price, 69.00000, but you don't know what time. So now you pick your time frame. And to the person who asked about scalping, when do you scalp? JK Markets. Wayne, when's the time to scalp? Well, maybe now. You drop into a 5-minute chart and you're in a zone in which you can buy. And you can scalp. Okay? And so you can do whatever technique you want. I mean, you could already see a double bottoms in play. You can already see someone scalp this. We don't know if it'll work. So, and this is what I mean by you could already see. Maybe you're like, Wayne, I can't see that. Okay, well, basic scalping, right? Bottom. Okay, then what? Okay, bottom. Higher high relative to the old high. So, the way I teach you to scalp is you draw a roll reversal and you look for a higher low. Price comes down. This is your buy zone. You buy it. Gone. Okay? Then you grab this top, you drag that, and this is a second scalp right in here. Okay? Higher high, higher than this old high, right? So that breaks the higher low on a roll reversal. Roll reversal. Gone. Okay? So one of those you're already in. You might be in here, you might be in here, you might be in here, but that's you scalping. And then, of course, if you get knocked out of all this and it goes lower low, you're like, cool, man, I want to get closer to 69 anyways. You see? That's multi-dimensional trading, multi-time frame trading. You develop strategic plans on a higher time frame, and you trade on a lower time frame. Now, scalping this, do you see the problem? Look how wide the spread is on this. It's fairly high, 2 pips. And in other markets, you might get something similar to this, but with less, like a half a pip less or something, but maybe that doesn't matter. Okay? You see? Isn't this wonderful? Join FX Bootcamp. Join FX Bootcamp. Join FX Bootcamp. You got to know this stuff. By the way, I'm going to run another ad. I know. I apologize. I am sorry. Once again, I'm hoping YouTube says, you know what? This is good content. We're going to throw it on the algo. Because if we get more people watching if YouTube decides. So I'm trying to convince YouTube. So I apologize. Richard says it's not a lot of pips in that trade. Well, here's the thing with most scalpers. They don't even take 20 pips out of the market. So 2 pips is going to be 10%. Plus you're risking your spread, right? Well, so you're risking that spread. Your stop might be, let's say you're going to do a 1-for-1. So you have a 20 pip stop, 20 pip limit, but your maximum limit can only be 18 pips. You're not like, so, but that's the problem. So people will pick up pennies when they can be earning Benjamins. Okay, so anyways, I hope that was helpful. Only half of you have clicked the like button. I was thinking maybe 2/3 of you would click the like button. But take a look at some commodities. Oil still stabilized over 100. We're coming into a 4-hour roll reversal, but off of a lower high. So that smells like consolidation. But if you're a bull, you're going to think about taking a shot. So maybe you drop into a Cinco now and you're thinking about it, huh? So you're staring at what? Where are we? 104? So maybe back down to 103 and a half, maybe? I don't know. By the way, I gave a 3-month outlook for oil. I think it was in the swing trading group a couple of weeks ago. Gold coming down. Okay. Current sell zone is here. Basic price action. The second one I would put down here is this one. Basic price action. Grizzly says, use an ad blocker. What? Susan, I can tell you, Jerome Powell has met Paul Volcker. Okay. And such. I don't see them as being the same, though. Paul Volcker was like one of these unique human beings that was as close to a superhero as you can get, just because he was so different. Most people are just, right? Most people believe they're above average. And then there is someone that is just indifferent to the whole damn thing. And I think Paul Volcker was kind of like that, where he's like, yeah, I'm going to have to put this economy into a recession. All I need to do is convince the president of the United States to go along with it. Oh, that's it, huh? That's it. Okay. So anyways, is Jay Powell Paul Volcker? No. But I guess what you could ask, if I may extend your question slightly, would Jay Powell allow the United States to have significantly slower growth and maybe even a recession? Yeah, I suppose the answer to that would be yes. Partially because he did meet Paul Volcker and probably have, a small conversation. Now, Paul Volcker has since passed, but nonetheless, it would have had a meaningful impact on Jay Powell, I'm sure. So, would a small recession in the United States be Jay Powell's Paul Volcker moment? Yeah, I suppose. Okay. The big question, of course, is when does it all end? When is a recession or downturn in the U.S. economy or let's say the other way. Which peak is the final peak? Which stock market rally is the last great rally of the United States? When does the United States not become the 800-pound gorilla instead of, being a part of a group, a collective of, dare I say, reserve currencies? Well, the thing is, there is no other reserve currency out there. And you might say, Chinese yuan. You don't know what you're talking about. You can't even convert it. It's like the least likely to be a reserve currency for a very long time. Now, I understand China is a big superpower and will very quickly be the largest economy in all ways. But it won't be a reserve currency anytime soon. And then you're like, well, what about euro? No, Europe it's too flawed as a setup. They are not willing to fix the mistakes. So that's that. And then you're like, well, what about Bitcoin? Maybe, but at some point, the central banks and governments will not want to give up that power and will probably do something to shun it underground, so to speak. So who knows? My point is, we're a long ways away. Okay? The euro was a very good competitor in the beginning and was expected to become a reserve currency and really was a reserve currency. Okay? I was listening to an interview with a former FOMC member, and he now lives in Marrakesh, Morocco. Okay? Walking down the street, they could sell you a nice little trendy fez hat or some hash. I don't know, what you buy in Marrakesh? You can buy something and they can sell it to you in local currency, US dollars, or euros. Which currency do you think a vendor in Marrakesh, Morocco wants most? Not based on law, not based on some other manipulation. What do you think that just a street vendor in Marrakesh, Morocco wants most? Their local currency, euro, or USD? By the way, I would love to go to Marrakesh. I'd love to go to Morocco. Definitely on my bucket list of places. Now, Mohammed says euro. Okay. Anyone else want to take a guess? At least. Oh, yeah. Oh, and the history is crazy awesome. The architecture is beautiful. If you love the desert, it's beautiful. If you hate the desert, but the history, the architecture, the food, man, oh man, oh man, oh man. Oh. And what's the train from Marrakesh to, is it Casablanca or anyways, there's a cool train I'd like to take there too. I think you could do you could still do the white tablecloths and all that kind of stuff. But Mohammed says, you simply said euro as they speak French there. True. And euro would probably also be accepted in like Algeria, for example, right? But here's what I'm told. Dollar, 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 dollar. Why? Well, the dollar's worth more than the euro. Okay? So it comes down to this. This is how a reserve currency is formed, by the way. So Mohammed's saying, well, in Morocco and other, like MENA countries, right? Or at least North African countries along the Mediterranean and such, that they will be demanding probably two foreign currencies, euro and dollar. Now, why? Well, they do a lot of trade, right? Traders, people from other lands, right? Foreigners show up on the shores and say, well, we have dollars and euros. And so you could say, well, I don't want to sell you my dates, my dried dates, unless you take your foreign money and then go to a local bank somewhere and then convert them and pay the expense of converting them. You see that? Like, that's a pain in the butt. That's an externality. It's a cost. And in some countries, that's going to be the case. Well, and what'll happen is one vendor says, I don't want to sell you dates for euros or dollars. I need you to convert them to the local currency first. And then another date vendor right next door, beautiful dates. And that vendor says, you know what? I'll take your euro. I'll convert it later myself. Don't you worry about that. You buy my dates, I sell them to you for euro. Now, maybe there's a little markup too, but whatever, he sold his dates and he's got euro. The other one doesn't have local currency and has dates. Okay? And then someone else shows up and they have dollars. There goes the first dates vendor and they're like, no, I need you to convert your local currency. I don't accept dollars. I only accept local currency. The more sophisticated vendor, the more competitive vendor says, oh, you know what? I also accept dollars. I accept euros. I accept dollars. Go ahead. I'll sell you the dates for dollars and I'll convert your dollars later. And off they go. And based on some idea of the value of that dollar, convert it into their local currency, a price is agreed upon and an exchange is made, a foreign exchange. Okay? There's demand for dates, and now the supply of US dollars in Morocco, in this case, has gone up. And then you can convert later. Well, think about this over the ages. 1,000 years ago, 2,000 years ago, 3,000 years ago. At different points of the world, there was different trade by different traders in different locations. So in the Morocco example, there's two reserve currencies, because that's all it means. Some people don't really understand. What do you mean the US dollar is a reserve currency? Well, it's not a law. The IMF or the World Bank didn't say, we declare US dollar is the reserve currency by law, by mandate, by God's word, US dollar. No, people choose to keep it on reserve. They choose to hold it. They choose to trade. they choose to use the US dollar as a consistent unit of account. $1 is $1. How much does $1 buy changes? How much wheat, how much oil, how many dates does $1 buy? The $1 is always the $1. It's a one unit of account. Well, when you're an international business and you do business with 5 or 10 or 20 different economies, now you're like, well, some of it's in pounds and some of it's in euros and some is in Swiss francs and some are in pesos and some are this. And so what is it all worth, Basil? Convert everything down to the one unit of account. Okay? And so in that case where there's lots of euro trade and dollar trade, those would be the dual reserve currencies. But if a vendor doesn't want it, it ain't a reserve currency. Okay? Now, think about it. At some point, if you have a country that's closed, no foreigners are allowed in, you're not going to have trade, and the dates are going to spoil. Or you don't allow the conversion of your local currency, and so right? That also impacts things. You want an open economy with a convertible currency to allow as much free trade as possible. And if so, you're going to convert what you have excess and be able to convert that into something that you have shortage. And therefore, your standard of living will go up. Okay? Do you remember that caveman they found in Switzerland? Who was shot in the back with an arrow. He was murdered. But his arrowheads and his shoes and I think he had flint rock and various other things that showed that he had traded with other cultures significantly far away, which means there were also probably professional traders that would go trade with traders far away and then bring that here and trade with buyers and sellers here. And they were professional buyers and sellers, but these guys were like cavemen. Long hair, long beards, wearing fur clothes, leather shoes. But the flint rock came from 1,000 miles away. And of course, that caveman with the flint rock or the arrowheads or, the various other things he had never traveled 1,000 miles away. So it's just kind of interesting. His standard of living went up when suddenly you could make fire whenever you wanted. But you couldn't do it with the material in Switzerland. And he was Swiss. And died with a bunch of holes in his back, like Swiss cheese. Anywho. So pound getting crushed here, which is interesting because we talked about it last night. And then, sure enough, just kind of go through some dollar pairs, I guess. Okay. So this is interesting. If you believe we've hit a bottom. So now look, if you're a bull, you're looking at this, you're dragging across, and then you're saying MM2, you're saying WM2, and you're saying high, okay, relative to this high. So you're going to drag this across. You're probably going to play this 21. And your new plan, if you're a bull, is probably like this. Hua. Now you're probably going to run into trouble around 106. But somebody might be saying, here's how deep the analysis is. Are you ready? You want me to tell you? The analysis, the strategy is not parity. Maybe. They're like, nope, this ain't going to parity, so might as well buy it at 105, take it north. What do you stink? Smell like a plan? Yeah. Okay. Now, what about this one? Let's go from this high to now. Okay. Still, okay, M is less than 0. M is less than 0. Okay? Y equals mx plus b, and m is less than 0. Okay? So you are bearish still. It's one way of looking at it. Okay? You have your X and Y axis. Okay? You have a downward slope, right? So M is a negative integer. So it's going to look like maybe like this. Okay, B is the intercept. M is the rise over run. Rise over run. Okay. So you might just say, well, I see this, but you're still a bear, which means you're planning on selling somewhere between now and tomorrow. Tomorrow. You're planning tomorrow right now. So if you're reacting, you're like, oh my God, look at the Aussie bet. Dude, you're going to lose. You're going to lose, man. Going to lose. So I'd rather you say, well, what's the sell zone for tomorrow? Right in here. So maybe around 71.50 is the price. 71 to 71.50. You're going to look for an opportunity to sell. How about a triple top? No, not good enough, Wayne. Okay, I'm not saying that's going to work, but that's what you should be doing and planning instead of reacting. Think of how many amateurs bought up here. Probably a ton. Okay. Okay. Where do you buy this? Just so you know. Even on a 15-minute chart. I have it all lined up, but I'll do it again for you. Okay? Okay? There's like this. The news comes out. Okay? up, 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 down, down, buy. So you're long right here. Okay. Then you have this move, but look what it did. How many people do you think lost money chasing this up on that 15-minute candle and then having it come down? 100%. All right, guys, I got to go. Sorry about that. I'll see you.